This is your weekend recap for Saturday, June 4th, 2022. Let's go. Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well. This is Dan Max at EXPI Realty, aka the Trade Agent, and this is your weekend market recap for Saturday, June 4th, 2022. Hopefully you're having a great weekend. If you are newer to the channel, it's just checking in, seeing what's going on, please stop by the Discord room. A link is in the description below. There's tons of information from whether you're a beginner trader or somebody who's literally just one little tweak in their procedures and their strategies might help you get over the top. Because a lot of it usually has to do with discipline or trading mentalities and mindsets. And there's a ton of information in the side rooms. And if you ever need questions or if you have questions, feel free to reach out. I'm always here looking to help if I can. And on that note, let's get into it. Keep in mind, next week, we're starting to get more into the middle of June. If you're not familiar with the Stock Traders Almanac, there's a few things that are going to be going on. It's looking a little more bearish seasonally. Also be aware, I was telling people about the 1970s, how they just compare versus now when oil embargo and prices spiked. Look what happened to the market. You had head and shoulders top, fail, and you dropped significantly. I think we're coming into that period again. We've talked about this, 1,000 times. Higher oil prices, gasoline prices creates demand destruction because people can't spend money on other things. They have to spend it on filling up their gas tank and getting to work. People feel more poor. Just in general, there's a lot of things that can lead to a recession. And as we always know, inflation is the key. It starts with inflation, and we're there now. So if you have any questions about the fundamentals going forward, again, I'm one of those people who's not really big in fundamentals because it's all about the market action. I mean, I've seen great stocks get absolutely mashed just because the market's dropping. Again, a rising tide lifts all boats. Same within reverse. So if you have any questions, again, stop by the Discord room. Link is in the description in the video below. Bitcoin. Said this a billion times. You got a head and shoulders top. You were just living on a prayer here at the 30,000 level. I would say as of right now, you need more information. Now, there's going to be a lot of trades like that where we talk about you need more information. A lot of people assume things are going to happen today, yesterday, an hour ago. Market doesn't really work like that. I've told people at all the time, you got to be thinking about your position, how it's going to react over time. And as much as we want to be right away, this one is, again, it looks very similar to last year. I think it was last May and June. Yeah. Pretty ironic how it bottomed on May 19th. What was the bottom here? May 12th, not far off. And yeah, chopping. We don't know. We just don't know. So if you're buying down here, have stops. You can get in and get out. Oil. This is the culprit of everything that's going to be a problem here. I think it's kind of ironic if you ever go look back at the charts. And you go look at the election. That was the bottom for oil. And then it literally went on a straight match higher from 30s up to 120. It's pretty impressive. A lot of people think a certain party that is in power right now is against oil, but everything they've done has literally pushed oil higher. The irony of it. I mean, literally we're at $35 a barrel. Now you're at 120. Do the math. That's a big monster run. At this point now, we are coming into levels though, in gasoline prices, input prices that really are going to affect the consumer because the consumer does not have unlimited funds. The average person was already living paycheck to paycheck, was already stretched in huge debt, was leveraged in things that have blown up in their face, and that typically leads to a recession. Now, again, people are saying, well, what about housing? What about this? The only thing safe at this point in my mind is cash, certain metal, I think precious metals long term, I think it is going to be a commodity bull market after this, but I think one of the things you have to be very aware of is that off the highs, nothing is safe. I mean, even housing might pull back, but again, you have to remember, people always need a place to live. They don't always necessarily need to fill up their gas tank. Primary residences will always hold up well. I think it's very obvious that if you go look at the realtor numbers, you can see very clearly that yes, there is weakness in second homes and vacation properties, but as of right now, not much in single family, depending on the location, obviously. But again, here we are with oil. Notice again when we talk about blow off top from the Ukraine news, and now we're holding tight. This retest has been pretty difficult for me personally to kind of wrap my head around, because ultimately I look at it like this. Price has already spiked. The damage was done in March. And again, the timing of things is very difficult. Talk about the market being kind of immune at times to what's going on, meaning like the previous trends can proceed and last longer than what is normal. Now, again, if you go study the past and we go look back at previous recessions, the irony of oil peaking here in June of this year is very reminiscent of many oil peaks. Let me see the last one. All right, here we go. June of 2014, fail. That was in June. April, May. We won't call that a June. But here you go. Here's the June peak for oil. July. I guess June 28th. Yeah, you got the weekly here. As you can see, late summer, post Memorial Day, peak. So, and again, this is the thing that's very hard, and I think a lot of people don't understand is, again, traded this for a long time, really recognize this up move. And one of the things we always say, right, is that, you know, when you have a nice smooth channel up, the breakout of the channel is usually the peak. That clearly was. Hopefully people see that. So what do you know, we interpret that from now. And I've always said that I thought, let me get you in here. The current, I thought the smooth channel, now this is a little dirty. I guess you can kind of draw it. And again, I don't use TradingView. Most of you guys know that. Let's duplicate this sucker real quick. Clone. All right. I would argue that we are breaking out of, we broke out of the channel. You can see that. How much higher can we go? It really depends. It really depends. I mean, could the smooth channel be the fail, or could this be the blowout on the Ukraine news? Now, again, the longer that oil prices sustain higher, the bigger the problems for the economy, the bigger price demand, or sorry, not price demand, that higher prices will deter demand in other products. Hence why every time you have massive oil spikes, you have recessions. It seems very obvious. At this point, keep an eye on it. Please be safe. Let me check something quick while we're partying here. We are recording. Thank God I didn't record. It was very annoying. TLT. We've said this now again. People say inflation is ripping the bond market has to get destroyed and rates go higher. If you look at the last 6 weeks, action approximately, I'd say 4 to 5. What has happened? Bonds have actually bottomed because they are anticipating deflation later. So it's kind of one of these things where the bond market is anticipating the pullback in oil, the pullback in commodities, and interest rates should go lower, because what happens is that when people pull their money, liquidity pulls out of the system, they're going to buy bonds for safety. They're not going to buy oil, gold, silver, agriculture, or whatever thing you think is safe short term. Now, again, long term, it's very obvious that stuff's going much higher, but in the near term, there is no the perceived safety is a joke, and we'll go through the charts and you'll see exactly why. So TLT, again, I would look at the 112 to 114 range, possibly reload. The low on Friday was what? 115. It's getting close. The dollar. Now here's, again, this is how you can kind of tell what's coming in the markets. You know, nice smooth channel, breakout, now a back test. This is where you're seeing the volume pull back in. I've said this a billion times, that when the world starts falling to shit, you're going to see very quickly how they come reeling back to the dollar. What is this? This is a monster channel on the monthly. This is going to take, like, this is months. You're going to go much higher. And people don't really wrap their head around that, but think about the devaluing of currency all around the world. Even though we are, you know, just maybe not as bad, but we are the denomination of the currency that when debt implodes, explodes, whatever you want to call it, people want dollars. They want to trade in their debt for dollars. And so what that does is puts demand on dollar as a currency. And that's why we've been acting so strong, even though people have been saying, well, the dollar should get smashed because of this and this. And no, all the stuff in Russia, other currencies around the world are the problem. They're piling into us because of perceived safety. The VIX. Getting into the market stuff. What do we say? Every time we get down to like 24, 25 range, watch out. Well, look what we did on Friday and Thursday. We're right below it. Now, is this going to play out like some little bull trap up here? Bull trap. bear trap down here, because I think it is. Now, if you look at the SPY, it didn't do shit on Friday, which is ironic considering the market did pull back. I mean, what was the Dow down? 350 points. Looking at this action, we're back testing this trend line. Bunch of inside candles. I think you can go with if you go higher, go with if you go lower. A lot of people are going to say, well, that's not really a plan that's very, you know, you've got a wide range here. Well, keep in mind, if the bear market rally is continuing, it should take out the highs to go higher. And if the bear market's continuing, it should take out this range and go lower. This is all, again, need more information. You don't know here because this 5-day range of consolidation should precede the next move. So be safe, be smart, don't get too aggressive here. And QQQ, sorry about the congestion in Vegas. 315 hit this channel, or not 315, 314s hit the swing zone here, backed off. Now keep in mind, I've said this a bazillion times, people who are newer, why we're in a bear market. The Qs never got below the 20-month and sustained on this whole thing. Nice smooth up channel, steeper up channel, blowout. Remember, trillions of dollars poured into the system. It found its way into the market. Now they're going to be pulling money out of the system to control inflation. Tech does not like inflation. Tech also doesn't like money being difficult to get and raise, because keep in mind that companies in the tech world are always leveraging by financing. You know, they don't want to sell stock. So if raising money gets more expensive, you got a problem here. And that's what ultimately leads to bear markets. I mean, look at what happened in 2000 and 2000s when same kind of stuff. Qs corrected almost 80%. Telling people now, I mean, if you're not in cash, you're going to be pissed off because this stuff can correct huge. IWM talked about the 188 area. What do we get to the high on Friday, Thursday? 188. Yep. You can see right here. This is what I'd be watching. Clear as day. Come on, friend. Let's widen this thing out. You got to get over that. And clearly it's not. And support equals resistance. Keep it really simple here because, again, you could go long above or start shorting here and failure. Gold. As much as I'm a gold bull long term, I do understand the fundamentals. Hence why I've told people you've got to be extremely careful. Never seen a gold bottom with lollipops, rainbows, unicorns, and all sorts of friendly. Everybody's happy. Talked about this little double top up here at the 174, and then Friday's action gap down. Market maker is not really that excited about this price action, so that tells me that they need to swipe out lower to get more people to sell, hence the move. And again, the best moves for gold and silver are always when the market crashes right afterwards and the Fed starts ramping up liquidity. Always, 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 always. And at this point, I talked about this cup and handle. It's going higher in long term, but this handle can get really complicated. Could be years. I mean, ideally not, but it could. And if it does, well, hopefully it doesn't take years. I would say more like probably months. 160 area. I've said 160 and below, I start getting interested. At 172, no one in the gold and silver, they're just too, they never listen. They won't pay attention, but they'll just buy it and it'll go lower. It's kind of like the uranium and silver train. They just don't listen. Silver, same thing, no brainer buy when it blows out. At this point, you got back to the top of the blue buy zone. What's happened? We pull back 19. Said this a bazillion times. The best time to buy silver is the exhaustion. Look at that. Boom. It went from 11 up to 28. 2008 down to 2000. The peak low in October. Look at that. 8 up to 49. That's when you want to buy it, folks. We're not there yet. Now, if you want to argue with me, you can. And maybe could this be some sort of, softer, choppy, sideways bottom? I'm going to go with no. And the reason why I'm going to go with no is because we're at the stage in the market when the liquidity starts coming out. Nothing's safe. Literally nothing's safe. I mean, margin calls, raising the margin requirements, all the people who are holding things, there's nothing safe. It all gets liquidated because, again, people need to raise cash, redemptions, just pay their bills. Nothing's safe. So just trust me. And if you don't do your homework, we've done it a billion times in previous videos. Same category with GDX. Love it down here. We thought it would bounce, and it did exactly. Now it's back up to the 200-day. And again, we look at the monthly. You go, wow, man, this thing just seems really cheap down here below the IPO price in 2006. And it is. don't think anyone's going to argue that, but I would argue that you need to be careful and look for the wipeout. Notice this long wick below the channel. Like, that was bonkers. I mean, 23 down to 16. Like, I remember that move, and it really just was like, wait, what? And then we started buying down here, and it was like, I don't care. When you get the blowout near the lows, you could have bought here, and then within days you were up. And it was one of those things because you knew it was the blowout. And then same thing, it's like the opposite with oil. It's blowing out of the upside. You're just trying to get close enough to short it. GDXJ, same thing. Wait. We held this range down here, 36. Back testing trend lines. I mean, I'm just going to plow through these because, again, I think the people who watch this on the weekend maybe aren't familiar with this stuff. But again, I want to see absolute carnage. And look at the volumes. That was a bottom. Look at the volumes now. This is not bottoming. There's no interest. Now, again, people say the price action has popped a little bit, but yeah, but keep in mind, stuff dropped 20-30%. Same thing with AG here. Told you to get out 1450. We said it probably holds down in the 7-8 range, no doubt, and it did. Where was the actual low? 750. Now you bounce back to 9. I'm just not that excited. Now, you can get excited about it. I don't mind, but I'm not going to buy it until I know the best upside is baked in because the worst is behind us. I don't think the worst is behind us. We're literally only 20% off the highs in the S&P 500. Probably more like 15%. This market can get absolutely beat, and it's not even close. Again, because we think about all the money that poured into the system when the idiots tried to plow money into the system to secure COVID and keep the economy locked down. That money now has to unwind. It's just a dangerous. It ends up being dangerous and ugly. Seen it in the past. It's but it's on a whole new level now. It's like 10x the typical liquidity bomb that they drop in and then unwind. AEM, love it. Probably looking in the 40s, and honestly, I would love to see it down here in the 30s. We'll see what happens. Again, the market is not rational when things are getting absolutely destroyed. It's a panic. Everyone runs. Everyone gets out. Like this company for the long run. I absolutely love it down here, but they will get bought out. Seems very obvious. Holding up pretty well. NFGC again. Sprott put a monster bet on this as a gold miner. I would trust that he knows what he's doing. He's been pretty good his whole career. However, at this point, what is the one thing that we have to be aware of? Again, it's the same thing. Market. You really can't trust it because nothing's safe. I mean, it's very clear. If you don't understand why, stop by the Discord room. I'll explain to you. Here's one of our best trades of the year. We talked about this going from 18 up to 38. Took our money out. Now what? It's pulling back to the 200-day. It's chopping. And you look at the monthly, you say, well, damn, that was pretty good at 38. Well, keep in mind, steel, commodities. People have their mind wrapped around that oil can just go on its own. And it's like all these tertiary and secondary commodities that relate to economic activity. Look at how they're acting. The stock went from 38 to 23 in a month. That is telling you that there's weakness economically because, again, steel goes into everything. It's very similar to oil. It goes into a lot of things, industrial built. VALE. So it's holding up. They're Brazilian. We got a ton of commodity exposure. Nice little bounce. We loved it down here, and now we sold up in here, and again, a nice pop. I don't trust it. CCJ. Talked about the action on Thursday, how it wasn't bullish. Outside reversal, then a double outside reversal, back lower. Dangerous. Now again, CCJ fans who are insanely bullish, which they have every right to be long-term because nuclear power probably will be the solution. But what do we know? Everything gets murdered. And if you go look at the monthly, we told people to start taking a break at 30. Why? Look at the fibs. Look at the volume at price zone. You can see it right here. This was going to be a problem. So, and it was. Now you're holding up at 25. I mean, I like the volume for accumulation, but I just don't. I don't know if it resolves more like that spike and then, or it's more like a pop and then a big flop to run higher later. My guess is it's probably something like this. And if you do the math, 12 up to 33 back to 21. So I mean, it can round trip and take a 50% haircut. So if you do 50% from 30s, you're talking a 15, 16 range, which people aren't going to like to hear that, but that's the reality. It's in the cards. Eero, this copper company, again, we like it. All commodity stuff. You got to own metals and all this stuff long term, because again, if you're going to build out the future, you need this stuff. I'll get back at 10. Just keep it simple. Mosaic and CF. Now here again, the ag names. Everyone's like, oh, food prices are going up. Farmers are struggling for agricultural supplies. Well, look at the stock. It's off 25% off the highs. The market is pricing in commodity weakness to come. Said this a bazillion times. Got to watch the straight line moves, because what do they lead to? Reversals. Sorry about this. Look, we're up into resistance. Back off. Let's run a fib real quick. Now, we've already done one, but again, I would like to look at the 2020 bottom. Yeah, 34 to 42. That would be like a dream buy. We'll see what happens. CF, same kind of thing. You've got your action up here. High and tight, should be pulling back in time. Again, these companies' fundamentals should be fine, but look at this nice smooth channel, blowout, top, head and shoulders. It's going to fail. You can see what's going to happen. It's not rocket science. We're into AMD now. We talked about this last week. What's the worst case scenario? I thought 106, 107, this trend line, but knowing that the actual markup from first of the month was potentially possible, we said what? The 0.618, the 100-day. Got above it, closed below it. I would be watching to add shorts on this. I mean, again, I'd hate to beat a dead horse, but I just don't trust tech at all at this point in the cycle. Apple, now again, here's another one. I mean, they're having issues. You know, we talked about getting up into the 150, you had a 2-day range, couldn't get above it. Now look, you gapped and go lower. Again, as Apple goes, so will the market. Facebook, we talked about this one, like 20-day area. It's kind of chopping. Be aware that this thing is taking a big haircut. So you have like this super choppy top, big gap down, and now choppy action, which to me would say short the highs and just be careful. At this point, I mean, it's all dead money. I mean, it's not going anywhere fast. It's probably going to go lower. Roblox, we talked about buying it down here when the volume exploded. Could have bought it. I mean, again, probably didn't get the exact lows because the volume didn't confirm, but you did have this anomaly day on earnings right here with the long wick. If you are holding it, just don't, I mean, it's going to get bought out at some point. That's my guess. Holding the 20-day, it looks okay, but just be safe with it. Like, be cognizant. Like, yes, it has gotten absolutely beaten, but the market in itself could pull it down. Very obvious. Tesla, what did we say? You know, watch this like range at like 770s. Nice little pop, gap down lower. Could it make like a little head and shoulders bottom here? I don't know. I just don't have faith in the stock. We always talk about how this was the smooth channel up, parabolic blow off and top, and it got just super sloppy, super choppy, making lower lows, lower highs. I wouldn't trust it. I mean, again, you can short pops. That's kind of the obvious trade, and take money on the dips. Don't overstay your welcome, as I would call it. EXPI. Here again is an example of fundamentals. A company that's absolutely stomping it. Goes from 90, it's at 14. Who knows where it'll ever go. Over the 20-day, it looks good. I mean, again, I work for the company. This isn't insider information. They're doing great, but it doesn't matter. Market don't care. UTHR. We talked about this. Congratulations. If you bought it down here, this double bottom, this was this accumulation phase. And then here you go. Led it to higher prices. Now, if you've got big gains in this, I'd roll up your stops. I mean, I'd sell covered calls, maybe 250 calls, sell something way out of the money with decent amount of premium. I don't know. Let's get into oil and end it there, because again, I think this is the part that a lot of people are waiting for. USO. Let's get into it. Notice the 2 days, Monday and Tuesday, or I guess Tuesday and Wednesday is a short week. The volume and the down action, greater than this up volume. Now, again, you have to respect it. We're getting over, I mean, remember, the highs are 130 a barrel. I mean, we're getting over the intraday action. I would be looking for a bull trap here. Again, I don't see the volume confirming it. I could see a pop and flop. You get into XOP. I mean, it's holding up pretty well. Multiple day range up against the channel high. I think you have references. If it breaks out of this, you got to go. Keep it that simple. We talked about UNG peaking. Like, natural gas has peaked. It hit its channel highs. As long as it fails the 20-day, I think it all goes with it. I mean, I hope you can see very clearly when you look at this stuff that you think in your mind, like, all right, it looks like it's all topping in pieces. Send it on ExxonMobil, maybe a few of the other oil names. Here we go. What do you notice? Again, the biggest day volume was a down day. We retested that high. I'm not saying necessarily that we smash on Monday, but I think down is coming. It seems very obvious. PXD, I'm going to run through a few of these just for fun for the weekend. Again, biggest volume at the highs. I mean, I don't think people are paying attention to this stuff, because if you are, then you see ExxonMobil, you see PXD, you see the UNG lower highs, you see, I mean, again, you see oil light volume takeouts, you know? I don't know. It's tops and bottoms are incredibly difficult. I always tell people that. Hence, you hope they retest. Sometimes they don't. This action, I don't know if it will. So, I know I got some other oil names in here. Do I need to like pull them up? I apologize. Pull up Valero. A lot of people when you're talking about this, again, how do you want to draw the channel? I guess that's fair enough. I mean, you're at the peak high channel of the channel. Let's look at Chevron real quick. And I hope you're having a good weekend and find this information pretty interesting, because again, I think you can kind of see, like, here's the channel high or the range high. No, I apologize. I'm just trying to draw it on the fly. Assuming it's something like that. Yeah, there you go. Now again, big up move, choppy, sloppy. Again, it gaps up and it fails. Like, you got to pay attention to this. Someone is not holding these stocks. It looks like to me they're distributing. And if you go look at the monthlies, you go, wow, that's a big freaking move. Is that sustainable? No. That's what I tell people. These big straight line moves are not. I mean, you can pull up. Keep in mind, ExxonMobil. When you look at UNG and USO, just remember they're shitty ETFs that will get smashed down when they do drop. Look at the monthly on Exxon. I said this range here. Now again, does this look sustainable? No. I mean, again, how big is the deep of the drop? Really depends on the time of the year or the time in the cycle, which my guess is, again, we're in a bear market, y'all. Again, here's XLE up against some like old channels. Come on, load it up. This is wild how this back tests this old trend break. Now it's up at the very high of it. Now again, is this sustainable? Now again, there's oil is under owned in the overall market complex. No one's gonna argue that. But the big problem I have with oil again is if here, for example, like look at the XLE in 2008. It goes from 92 down to 33. You had this spike, you drop big. You had this big spike, you drop big. Now again, it could take 3 or 4 months, but this thing could get cut in half. Anyway, hope this kind of stuff helps. Now again, be safe, be smart. If you're shorting things in the oil patch, give yourself time. Do not be, you got to be right away kind of thing, or it's only going to last a week. Keep in mind, like if you do look at, say, for example, pull up the USO monthly, do be aware that when it did peak in 2008, it did go sayonara, goodbye. Pull up the UNG, because I think you can see that in that as well. Remember, these ETFs just, they're great to short. Look at that thing. I mean, 2000 to whatever, reverse split. I mean, they're just absolute gems to short when these things do drop. Anyway, I hope you have a good weekend. Hit me up if you have any questions. Link is in the description below. I appreciate everybody. Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.